Welcome to Money Market, a Bank of Tampa podcast. We highlight the businesses, expert business advice, local economy, and points of interest in the Tampa Bay market. Follow us on Spotify, Apple, or wherever you find your finer podcast. Please share this episode with a friend or colleague. I'm your host, Owen Lefebvre, the Pinellas County Market President for the Bank of Tampa, Tampa's oldest and largest community bank. Today, we're joined by Kevin Gilligan to talk about the ever-changing world of SBA, that's Small Business Administration lending. Kevin Gilligan is the Senior Vice President and Director of SBA Banking at the Bank of Tampa. With over 15 years' experience, Kevin brings extensive experience and expertise in the SBA lending field. As a current board member of the Florida Association of Government Guaranteed Lenders, FLGL, and SBA Region 4 Committee member of the National Association of Government Guaranteed Lenders, NAGL. And man, that is a mouthful. Thank God for the short acronym. With a strong foundation in business and finance, Kevin has a deep understanding of SBA programs, lending practices, and is a respected leader and trusted advisor. He certainly is at the Bank of Tampa. He is our expert in all of the banking and SBA related areas. So without further ado, I bring you the Sultan of SBA, Kevin Gilligan. So welcome to Money Market.
Hey, thanks, Owen. Thanks. Appreciate the invite, and I'm happy to be here.
And I figured I needed to give you a nickname because there's SBA Ray, there's the Queen of SBA. They have their own monikers. I mean, yeah I think you need one.
Self-proclaimed.
I proclaimed you.
That's right. Yeah, that's right. I think this is the first.
So, man, thanks for coming on. So we're here to talk about SBA lending. And so for those listeners that aren't familiar with what exactly SBA lending is, can you please just provide a general overview?
Yeah, absolutely. So SBA stands for Small Business Administration, and the SBA is a government guaranteed lending program that banks participate in.
So in this case, the government is here to help.
Yes.
Okay.
Yes, and their programs provide capital to businesses when they need it most, or in times where they may not qualify for a loan conventionally. They may be one or two pieces away, and the SBA steps in, provides the bank a guarantee, and then we're able to offer the loan with the guarantee in lieu of the things that would keep it from being a conventional loan product.
And so the guarantee, you mean the government guarantee?
Correct.
Okay.
Yes.
So what is different between SBA and conventional or traditional lending?
Yeah. So big thing is we have a set of rules that the government sets forth in what's called their standard operating procedure, or SOP is commonly referred to. And we're required to follow those rules. The rules dictate how we collect an application, how we underwrite a loan, how we close the loan, and how we service it. And provided we do those things, the government then provides us a conditional guarantee, the bank a conditional guarantee to be able to provide that financing product, that lending, the loan product to a borrower in need. Common misconception there, though, is that it is a conditional guarantee. It is bank money unless something goes bad with the loan, and then that's when the government steps in and will honor their guarantee, provided that we've followed the rules.
Okay. Why is it a popular choice for small businesses?
The reason that SBA is so important is it's really shaped the landscape of our country. So when a business starts, or when a business is in transition or in growth, when you have to rely on projections, things that are outside the normal conventional underwriting parameters of a standard loan, that's where the SBA steps in. So we're allowed to take into account projections or future business revenue, or even opportunity in a lot of cases, to provide a loan based on those projections or the potential, so that a business can grow.
So in contrast, I mean, if someone goes in for a conventional loan,
sure,
or a traditional loan, you can't go in with projections, right? I mean, for the most part, correct, unless there's some additional form of collateral, yes, cash collateral, yeah, maybe real estate, so a bank traditionally wouldn't be interested in financing. But in this case, because it is a startup, you're using projections, the SBA allows that.
Yeah, really the big things are when a business is growing or starting out, or in transition, maybe it's selling to another buyer. Most of the time they lack the collateral or the historical cash flow to get a conventional loan, and that's where SBA steps in.
So collateral, balance sheet too, often?
Correct, yeah.
Okay, so what products are available under SBA lending?
So the two primary products are SBA 7A, program, and then the SBA 504 program. The SBA 7A program is kind of the catch-all. Anything you can do through SBA, you can do through the 7A program. The SBA 504 program is really intended to provide financing for owner-occupied commercial real estate or business equipment that has a useful life expectancy that exceeds 15 years. 15 years or greater. So it's a lot of banks push the 7A program because you can fit everything.
Okay, so 504 is a lot more limiting in terms of what you can actually finance.
Correct.
And I want to put this out there because I get calls on this, not that frequently, but every once in a while. Investment real estate does not qualify because you specifically said owner-occupied, right?
So SBA is specifically designed to assist owner-managed, owner-occupied businesses.
Okay, so investors need not apply.
Correct.
In 7A, so you mentioned it's a lot more flexible. So things like equipment, working capital,
working capital, leasehold improvements, real estate purchase. Our big piece is business acquisition or partner buyout lending. You can do that all right through the 7A program.
Okay. Are there any limitations on size?
There are, yes. So the 7A program is capped at $5 million.
Okay.
That's a loan amount. There's some flexibility to how you look at loans when they go beyond that $5 million mark, especially if it involves commercial real estate. But the maximum SBA 7A loan that can be done is capped at $5 million.
Okay. So where does the creative part come in? Like, how do you get above $5 million?
So if there's commercial real estate involved, then you can do a combination of either a conventional loan and a 7A loan, or you can do a 504 loan and a 7A loan. There's some flexibility on how you can look at those things when you have a larger need that includes commercial real estate.
Okay. So it's not a cap to an individual borrower or entity. You could do effectively like a $5 million 504 and a $5 million 7A. And I know that would be difficult, but like theoretically speaking.
You could, theoretically, yeah. There's a cap to how much the SBA provides a guarantee to an individual borrower.
Okay.
But that's getting into the weeds. We would need to really go through an underwriting class to start to understand that.
We got all the time in the world, man. We'll do a 3-hour podcast. Yeah. Let's
go. So without making it too hard to understand, yes, you can do combination loans in SBA. Really getting a lender that understands that and understands how to process those loans are obviously very important. So having somebody that has that specialty is key.
So I do want to touch on, and not to malign, so don't mention anybody's names.
Sure.
But the SBA product gets a little bit of a bad rap because there are a lot of just kind of shyster SBA lenders out there. I mean, is that true or false?
No, it's 100% true. I read.
Give me names.
Yeah, right. We're going to need that 3 hour. No, I'm just kidding. No, in all seriousness, I read an article recently that talked about how SBA lenders in general have a worse reputation than even like used car salesmen.
No kidding.
Which is pretty sad. Again, it comes down to experience, right? So most of the time when you're hearing bad information, it's just because the person just doesn't have the knowledge base or the understanding or the experience in the industry.
Okay.
The SBA standard operating procedure is public record. Everybody can go out to sba.gov.
Oh yeah, I reviewed it.
And download the 400 and odd page document and read it for themselves.
I have not read through the full thing, but yes, I've read through it.
Well, if you have problems sleeping at night, pick up the SOP and you'll be asleep in no time.
It'd take me 3 years to read it.
Yeah. The key is that a good SBA lender, when they talk about a rule, they will go out and they'll point to the SOP and show page number and actually pull the rule. A lot of times what SBA lenders, and this is a big misconception in our industry, is somebody will say, well, that's an SBA rule. What they're not telling you is that it's a bank SBA rule, not an SBA rule. Like we have rules too. Don't get me wrong. The Bank of Tampa has a particular set of parameters that we adhere to when we're providing an SBA loan. when I tell a client, hey, or a prospect, or really anybody, this isn't really the type of loan that we're comfortable with. I'm not saying, hey, this is not an SBA loan. I'm saying this is not a loan that we're comfortable doing with the Bank of Tampa.
Yeah, everybody's a little different.
Yeah.
Underwriting practices are different.
Correct,
Policies
right?
are different.
But there are a lot of lenders that will just go, this is an SBA rule and period, and move on.
Okay. Kind of put up that wall just so they don't have to have any other conversations.
It's deflect, right? Deflect. Yeah. So it's there's a lot of misconception around that. And then there's also, there's rules that there's different types of lenders out there. So there's lenders that are what's called GP, or general practice, general purpose lenders, who are required to underwrite the file internally, and then they actually submit it to the SBA for their approval. And then there are members of the PLP program, or preferred lender program, where those lenders are allowed to underwrite and make a loan decision based on delegated authority provided by the SBA, and that delegated authority comes with a pretty hefty application process.
And that process is typically quicker, right?
It is. Yes.
Okay. So what are the pros and cons to each? Why are some lenders a PLP and some are just a GP?
Yeah. So there's two main reasons. One, from a risk perspective, right? So a lot of GP lenders want to stay GP because they want the SBA signing off on all of their files.
Now, is that just like an additional layer of, so they're not
protection.
Responsible? Yeah.
Sure.
Okay.
Yeah. The SBA provides a conditional guarantee, and going back to what I said earlier, underwrite, approve, close, service, all of those things have to be done in accordance with the standard operating procedure in order for a bank to collect on its guarantee. So a lot of banks will stay as a GP lender because they want the SBA to physically acknowledge that this is an SBA eligible loan.
Okay. But in doing that, right, I mean, it's an additional process. The government is never the most efficient entity in the world. So is it safe to say it just takes a little longer?
It does. Yeah. The PLP process is really, we're underwrite. And by the way, the Bank of Tampa is a member of the preferred lending program. So we're a PLP lender. It's more streamlined in terms of we underwrite, approve in-house. Once we have an approval, we submit to the SBA for their due diligence, but we've already done the due diligence. We know whether we're going to get the approval or not. And typically that turnaround time is about 3 business days for the SBA to issue a loan number.
Okay.
I've worked for GP lenders as well. And that process, once you submit it to the SBA, it can take 72 hours to get a processor assigned. And then they're going to ask for a list of documentation and questions once the file is submitted there, of course. So that it can cause a lot of back and forth, right? And that's really where the delay comes in. The key is the most successful loans are done with experienced lenders that understand the SBA process, that will underwrite and approve and provide terms consistent with what the SBA's standard operating procedure allows. And that just creates for the smoothest possible process.
So you really need to have faith in your lenders and underwriting and expertise in order to really fully participate in the PLP.
Exactly. Yes.
Okay. I kind of do want to go back to, you were talking about, some SBA lenders being viewed in the same light as used car salesmen. So I was at a conference. This is probably 2 years ago now. So Frank Luntz, who is a pundit, he does a lot of political commentating, but so he presented and was talking about the most respected professions, and like no doubt it was doctors and firemen and nurses and kind of your policemen. This is maybe this is like 4 years ago now. It was pre-COVID. Then they also showed the least respected professions. And bankers were at the bottom of the list. So used car salesmen, attorneys, I think were in there somewhere. But we were at the bottom. So it's not just SBA; it's bankers too. But we're trying to dispel that.
Yes. Right? Yeah.
Any good stories, success stories you can share on SBA loans that you've done? Yeah.
So there's so many great stories. Really, being an SBA lender, I have a huge passion for small business, right? We really provide financing for people to take what their dreams are and really they become a reality, right? So in particular, there's
Dream maker instead of the Sultan SBA. You're dream maker.
Dream maker, right? Yeah. One story in particular, current SBA client of the Bank of Tampa, went to USF, graduated with the degree in marketing, played on the basketball team there actually, and she was waiting in line at a Starbucks, and she met the owner of a Tampa Bay based large company that's now it's statewide. It's well known statewide. It's a name that is very popular in their industry, and it's known across the state. She spent about they became friends. Spent about 5 years working for the company, and she became a franchisor of the company. About 5 years in, the owner of the franchisor decides it's time for me to retire.
Okay, man, that was great timing, right? Sometimes you just luck, right place, right time.
Exactly. She had been in the company now as employee and marketing, and kind of worked through the back office of the franchisor, and now she's an owner of an individual entity. And she knew that this was her opportunity to really step in. She had the highest performing business that's in that franchisor, underneath that franchisor umbrella, and she knew that she had what it took to really create the next phase of the franchise.
Well, I mean, being a basketball player, right? She's competitive, so
correct,
driven.
Yeah. Well, downside is, that not really enough capital to really come in and buy a business, and very responsible borrower, just not enough time to save up enough capital.
Yeah, not enough cash.
Yeah.
Which is exactly what the SBA is for, right?
Which is why the SBA steps in, and we provided the financing, and she's a great woman, not to mention, but she is also a fantastic business owner. What she's doing with that franchisor is going to take it to the next level, and really be a fun thing to watch.
That's awesome. So someone who didn't have the capital, but because of SBA financing, now is a business owner and successful and thriving and growing her business.
Yeah.
So we've mentioned the SOP, Standard Operating Procedure, which is the SBA Bible or Torah or Quran, if we got to be inclusive. We've got a new SOP. So what has changed in the 400 something pages from the last one to this one?
Yeah, lots of stuff. So it actually shrank, which is which is
government never does it.
Exactly. And the big thing is that they've really put the emphasis on the bank. They have a new rule called "Do What You Do," right? So this is really going to
just be you.
Yeah, it's clear as day, right? Do what you do. So for people that are used to bankers that are used to following instruction provided by the federal government, do what you do. Everybody was like, "What does that mean?"
Right? Yeah.
The key piece of that is what they're trying to do is put prudent lending practices back on the banks, right?
Okay.
So opposed to actually dictating a lot of the things that they used to dictate, they're saying, "Do what you do." If you require 25% on a small conventional piece of real estate, do what you do, right? Now,
that's really interesting.
Yeah.
So it's providing a little more flexibility, because the SBA product was always so rigid. Like, you only can lend this much and this amount, this structure, this advance rate.
What I think will happen is that over time, it will separate lenders, right? You'll have the lenders that really truly understand the need for the program and want to be part of expanding businesses and growing businesses. And then you'll have other lenders that will just adhere to the letter of the law, won't incorporate any of their conventional lending guidelines to be more flexible. And they could have challenges down the road. The big piece of the change, and this is actually in terms of the world of SBA, this was groundbreaking. Is they're now allowing partial buy-ins for businesses. So for partner buyouts, for business acquisition loans, historically the seller, the person that was selling either their shares or the business assets, had to completely leave the business. The SBA changed that rule. They want to make it easier for businesses or for entrepreneurs to access capital to enter entrepreneurship, business ownership. and they're allowing it with experienced owners to be able to stay in the company as well.
Okay. I mean, that's a great asset to be able to potentially to be able to stay around and mentor someone. Now, is there a limitation or maybe a requirement in how much you buy? Do they have to buy like 51%, or is it?
They buy as little as 1%, believe it or not. There's
Okay.
there's no limitation. Now it's based on appraised value and the percentage of the stock and all. There's some rules that go into it. But if you have somebody that's been in a business for a long period of time that maybe hasn't had those big high salaries of a business owner, right? They now have the ability to come in with limited equity injection and buy a piece of a business rather than having to buy the whole thing.
Wow. Okay. That's extremely flexible. That's fantastic.
Yeah. Now the caveat is there's some flexibility there. The SBA also
It's always a catch, man. Always catch.
So any owner that is going to own 20% or more of the stock post closing is required to provide a personal guarantee.
Okay.
Just like the buyer is. But outside of that, it's pretty flexible. And if you have an owner that wants to stay on and have 15% equity, just have some upside in the future success of the business, they have that ability to do so now, and be able to secure SBA financing. The other big thing is the SBA has made it a lot more flexible on what's considered an equity injection.
Okay.
So equity injection is the same thing as a down payment, right? So when you buy a house, you have to put equity down or you have to put a down payment, and that's that's what the SBA does as well. Historically, SBA said cash is king, right? So
Sure.
There's lots of caveats in it, and we can get into the weeds of those rules, but really cash was king. Now the seller can hold a note for the equity injection.
Oh, okay.
So they can hold up to
done often in conventional financing.
Correct.
And we consider that equity. But so the SBA now allows that as well.
The SBA now allows it as well. They can contribute the entire equity injection as in the form of seller's note. There's some rules, like has to be on standby for a period of time, and it has to hit the cash flow historically. There can't be balloon payments, and it can't be tied, the amount of that seller's note can't be tied to the future performance of the business.
Okay.
But
it's got to be subordinated.
It's got to be subordinated. It's just basically defined, right? You have to define it. And once you define it, as long as it's subordinated and there's a repayment plan, then you can count it towards equity.
Okay. I mean, that's extremely flexible. That's a nice addition. So you had mentioned the potential to separate some of the lenders as a result of the changes. So a lot of the lenders are in that space. I mean, we've got big banks, regional banks, community banks, fintechs are very active in the space.
Sure.
Can you talk about each of them a little bit and how they approach it differently?
Yeah, I can. So, fintechs really made a splash, right? Like they're coming into the market. The SBA just announced one of the big changes as well in the standard operating procedures. They're going to allow more fintechs to do SBA loans, right? So they're
eating into our business, man.
Yeah. Well, there's a lot of critics against that, and there's a lot of data that says fintechs were responsible for a lot of the fraud that happened during PPP, the Paycheck Protection Program. I'm excited for it because I think that they're not going to compete in the same space as a bank will. I think they're more focused on margin, where a community bank will sacrifice margin for a long-term relationship with a client.
Mm-hmm.
So I don't think we're going to compete in the same space. Maybe we will on some things, but I think that a fintech will bring, some financing that maybe a bank isn't able to provide based on, higher margins and lower overhead.
And I think some of that, they push innovation, right? And as a bank is an industry, banking is not very flexible. We're overregulated. We can't be creative. And so what you've seen with a lot of fintechs, and not necessarily the SBA fintechs, but fintechs that are starting up and they end up being purchased by the bigger banks.
Sure. Yeah. Yeah, no, you're 100% right. And I think a lot of banks are looking towards technology now, or taking more of that road that the fintechs did, to say, hey, we don't have to be a fintech to be able to provide certain things and do certain things, but it's going to take a while.
So why not? So why go to a fintech? Why to go to a big bank?
Sure. So really the big difference is all about relationship. A big bank, you're going to have an SBA 90% of the time, right? I'm speaking in generalities here, but 90% of the time you're going to have an SBA loan officer that's going to provide an SBA loan, and then you're not going to hear from them again, right? You're going to be doing deposits through either an online mobile app, or you're going to come into a bank and you're going to have to wait in line and be just that other number as you would at any big bank that has a regular consumer relationship with them.
Yep.
Community banks are a lot different, right? Like, so we talked about, relationship pricing, right? What does that mean? Sometimes we reduce rate in order to make it more viable, help a business stay more viable or become more viable. Maybe it's, treasury products, having that hands-on approach where you have somebody that is not only invested in that one particular loan, but they're also invested in your continued business success. And that's what community banks provide. That's what has made the Bank of Tampa the bank of owner-managed business. That's what's made us successful is we've been there. We've taken small businesses and had a relationship manager that's held that business owner's hand and seen businesses grow and become successful along with our bank, right? That's the difference between an SBA lender at a community bank and some of your big bank lenders, right? You're going to have somebody that's going to be there and be able to be that.
Yeah, be a consultant,
person.
to be a partner, and I think it's not for everybody. Some people they don't value relationships. So like a fintech or a big bank would be perfect. If they want the product, they want to move on, they don't care who their lender is. But I think in our experience, and I'm sure you'll agree with this, but owning and managing a business is something that's very personal, and things don't always go exactly as planned, good and bad.
Sure.
And when you need some advice or you need to pivot and maybe need something else or a modification, you're not going to get that same level of attention and service at a big bank or a fintech, right?
Well, yeah, and PPP was clearly the magnifying glass of that, right?
Oh yeah,
and so there's a place for every SBA loan, right? Community banks are just going to provide that.
Very inclusive.
Thanks.
There's a home for everybody.
Exactly. Yeah. I mean, if you want that relationship, you want that person that's going to be there when you need something and is going to pick up the phone. That's where community banks come in.
Whenever you call me.
Yeah, there you go. I'm not going to.
You're not going to finish that? No, we're not going to do karaoke.
This would never make it anywhere if I started.
I didn't prep you for it. All right. So a little bit of a lightning round.
All right.
So SBA myths. Doesn't have to be a lightning round. If you want to elaborate on anything, feel free to.
Sure.
But okay. Myth number 1, SBA loan products are not borrower friendly.
Yeah, it's not. The biggest thing. So that's probably the biggest misconception in SBA lending. They are far more borrower friendly than conventional loans.
That's outrageous. It's outrageous, Kevin.
I'm the SBA guy, man. I got to believe that. No, so
why?
Just as here's really quick. For instance, one is term, right? So term is big. So when you're financing goodwill, when you're financing something that doesn't have hard collateral to it, SBA allows 10 years without a prepayment penalty. Conventionally, 5.
Yeah.
5,
like
right?
Lucky. Yeah.
Okay, with a 3-year renewal, probably, right? We're 10 years without a renewal. Yeah, you got to submit some financials once per year as required by the SBA, but it is 10 years. And if you make your minimum payment each month, then 120 months after we close the loan, you're done.
That's not a bad deal.
It isn't.
All right, myth number 2.
Sure.
The lending process is slow and inefficient. I mean, it takes forever. It takes forever to close an SBA loan.
For some lenders. Lenders that have a dedicated SBA department that do nothing but process SBA loans, generally speaking, have a much faster turnaround time and processing time than banks that do multiple different types of loans for one particular loan.
So a bank that has that backroom support, can
Correct.
they close an SBA loan as fast as a conventional
100%.
Loan?
So I can tell you, I've closed a real estate loan in 21 days.
Get out of here.
SBA. No, SBA. Had a very, we had a borrower that was like, tell me what you need and I'll give it to you. And she literally did that. Like I would email her and within 2 minutes I had it.
Wow.
But from underwriting to closing.
Not all of them do that.
Yes. It was 21 days.
That's incredible.
generally speaking, from the time that we collect an application to the time that we're sitting down to closing is between 6 to 8 weeks. That includes all due diligence, everything.
60 days isn't bad. I mean, that's a lot of conventional loans close in 60 days.
Yeah. And most of our loans close within that time frame.
Amazing. Myth number 3, rates are outrageous.
So they are, if you go to banks that are focused 100% on the margin. So a lot of banks recapitalize by selling SBA 7A loans on the secondary market. We have the flexibility to hold the loan or sell a loan. So for the right businesses, we offer much lower interest rates, right? So it's a misconception.
Okay. SBA lends money directly to small business owners.
That is under the 7A program and the 504 program. When you come to a bank to get a loan, it is bank money unless something happens. The SBA is providing a conditional guarantee to the bank. There are loan programs like the EIDL loan, which is the Economic Disaster Injury Relief Loan, that provides, the SBA will come into a disaster center and provide loans to businesses that are in that
direct
disaster
loans.
center.
Direct loans. Yeah.
So if there's, in the event of a hurricane or something like that, the SBA can provide direct loans. But the bulk of the money that is, you see when you hear SBA loan dollars is in the 7A or the 504 program, and that is bank money.
Bank money. All right. Next myth. Any small business can receive a small business loan.
That is also incorrect. Yeah. So the SBA has certain industries that we can't do business with. So marijuana businesses.
Okay.
Anything that has sexually explicit in nature, gambling.
All right. So Tampa Bay is the strip club capital of the world.
Do not
apply.
Loan.
Okay.
Yeah. Do not apply.
Okay.
Yeah.
All right. Last myth. SBA loan options require extensive collateral. They're going to take everything you have. They're going to take your house, take your kids, take your wife.
Yeah. Also, not true. So SBA loans of $500,000 and under, the SBA does not have personal collateral requirements.
Okay.
Once the loan goes above $500,000, we do have to look towards personal assets to collateralize a loan that has a collateral shortfall. In some cases, we do have to take a second or a third position on a residence that you may own. But outside of that, there aren't really a lot of additional collateral requirements.
Okay. So, I mean, if you are a borrower interested in an SBA loan and you fall under that in that category and you have a first mortgage and a home equity, I mean, the SBA would still be willing to take a third. I mean, what if there's no equity?
Yeah. So if there's no equity, there's nothing for us to lien.
Okay.
Right. So, a bank is not supposed to, it happens all the time, or I should say a lender is not supposed to decline an SBA loan for a collateral shortfall.
Okay. Going back to the income, because you can use projections, I mean, or just existing income.
Correct. Right. Yes. So if you ever hear that's one of the misconceptions we talked about earlier. If you hear an SBA lender say, we can't do this loan because you don't have enough collateral, that's a bank rule, not an SBA rule.
Ah, okay. Good tip. All right, man. Well, I appreciate you coming in. Kevin, if people want to find you, where can they find you at?
They can find me on my cell phone is always the best.
I don't think you want to give that out.
Yeah,
you want to give it out? Up to you, man. Yeah. Okay. Yeah. Give it out.
It's everywhere anyway. I mean, if you Google me, it's going to be there.
All
right. Or you can, how about an email? We'll start with email. So K Gilligan, just like the island, Gilligan at bankoftampa.com.
Awesome, man. So Kevin Gilligan, thank you for coming on Money Market.
Thank you, Owen.
If you have any questions or a future show idea or would like to be a sponsor, you can find us on LinkedIn, X, Facebook, and on Instagram at Bank of Tampa and online at bankoftampa.com. Thanks for tuning in. Thanks for subscribing. Until next time, adios.